Bitcoin's price is currently $21,507. And as you can see over here by the long-term regression curve, we are now just 6 days away from closing its 12th week outside of those lower bands. This is something that we've covered on many of the shows before. And I mentioned that this is not what you want to see if you are a long-term bull in the market, is 3 months outside of those long-term regression curves. It looks like the previous candle has fully engulfed the prior 2-week candle, and that is not a healthy look. We could be seeing some sort of a capitulation in the weeks to come, and I'm going to show you exactly what I am looking at. Yes, sorry, 1 second.
Check your echo cancellation on screen.
Give us a second, guys. I see we have the sound issues once again. Echo cancellation is on. Is there a problem with the sound?
Slight cutting sound.
Let us know in the comments if it's okay. We do apologize. Okay, I'm going to carry on over here. So I'm going to show you why in a couple of weeks' time we could be seeing some sort of a capitulation and what you can look out for in order to hedge that and not be trapped by that kind of a move. So looking at the monthly chart, I brought this up as well. We haven't looked at it for a while. You can see that the MACD is still cross bearish. The histogram is continuing with increasing power towards the downside, and I still expect a little bit further for this one to go. Looking at the RSI over here, the RSI has ticked back down. So I mentioned to you guys previously that we're looking at this zone over here, and what you essentially want to see is you want to see this tick back up, but you want to see a close and confirmed hold above that zone. The new month is now rejecting off of that area and crossing back down. Now, this is a common misconception that a lot of people believe that when the RSI is at very low levels, then pretty much the market's going to bottom, right? But that's actually not the case. The further down the RSI goes, actually the more bearish it is, and it doesn't mean that it's necessarily going to bounce just because it's sitting at 43 on a monthly chart. This can go down much lower. So with that being said, your price levels that you are looking at, let me just quickly remove that. So over okay guys, 1 second, let's just change something on the settings over here. Okay, testing, how's that? Is that better? Let us know in the comments. James will monitor that. Monthly chart over here, you're looking at some key levels. It's still the quarterly close, which is the most important level, and I want to show you how this lines up. Remember the number, or write it down. 19,924 is the primary level that I'm watching, but remember, the more times that zone gets hit, the more likely it is that it is going to break to the downside. So currently that price will work like this level will work like a magnet towards price, where it will tend to pull it directly into that zone, and there is going to be confluence with that on the weekly as well as the 3-day and the daily chart. So keep that number in mind. 19,924 would be the next downside target for the bears to take control, and bulls need to bounce it off of that zone. Otherwise, you're going to be looking at a lot lower levels. So weekly chart, one of the most important charts, second to the daily. This is kind of what you're looking at. Now, when you do your technical analysis, you want to always ask yourself, based off of the prior week's candle close, what is the most likely thing to happen this week? So the most likely thing to happen when you look at a candle like this is, of course, continuation to the downside. Now, when looking at that continuation to the downside, you want to then start to take into consideration other time frames like 3-day, 1-day. Daily is going to be the most important in the current environment, and then start to outline the most important targets. Now, when I zoom into this over here, well, first and foremost, you can see, again, we've lost the 200 MA, the purple 200 MA, and this is the most amount of time Bitcoin price has ever spent underneath that 200 MA. The worst thing that can happen for us, or our bullish case, look, we're all long-term bullish on crypto, otherwise you probably wouldn't be here. The worst case scenario is for this moving average to start to roll over. That would be an absolute disaster. We want to see bulls take control before that happens, and in order for that to take place, bulls need to capitulate, but they seem to be refusing to capitulate, and the primary reason is around the stock market. They're calling the bluff on the Fed, on their tightening, expecting that they're going to pivot, and I'm going to show you exactly what I mean by that in a second. We need bulls to capitulate. The best thing that can happen is for the Fed to come out extremely hawkish and pretty much crash the market. This is my personal opinion, because that will lead to a capitulation event. We can bounce possibly off of the $16,000 level, wipe everybody out, and then quickly recapture these zones before these all-important moving averages start to turn over. The worst thing that can happen is those moving averages start to curl. Then you start to get a much longer-term bear market and a much more bearish situation in the long run. So important levels to focus on over here. Okay, 1 second. Here comes James.
Just click the StreamYard thing on again.
Which StreamYard thing? What, the echo?
Echo cancellation, and then take off automatically adjust. Okay, perfect. That's good. This is all we can do.
Okay, guys.
Just stay a little bit further away.
We apologize. They have been experimenting with the studio. I really appreciate your patience. Thank you for your time. Okay, let's continue. So as I was saying, the most important level to be focused on over here is going to be your weekly range low. There is a lot of confluence over here with weekly opens, closes, quarterly opens, closes. It's a key level over here. You can see the wick price action over here and how prices wicked off of the zone multiple times. Now, that level is coming in at 20,784. That is one of my last lines in the sand for the bulls. If the bulls lose that level, price is most likely going to go down to this 255 MA, and it seems like the 255 MA is kind of becoming the new 200 MA. What was an important zone, and everybody focused on the prior runs. It seems like the 255 is that new level to focus on. That currently is coming in at about 19,900, which I mentioned to you on the monthly chart, is an important zone to focus on. If we start to lose that, then I think we could be leading into that capitulation event, and you can see that your key level is coming in around $16,000. I would rather see this happen very quickly in 1 week, leave a massive wick behind, price move up after that, and then we can put an end to the bear market. But this is the primary reason why bulls are I don't understand that they seem to be still longing into resistance over here. And if you have a look at this chart over here, it's the S&P 500, the E-mini futures over here, which has a strong correlation as well to crypto. And now we have a confirmed third lower high, right? So we had high over here, lower high, and here is your next lower high that seems to be confirmed. I mentioned that something very bad that would happen in the future is if we start to break below this key horizontal, which is the orange line over here. If you put that on your chart, it's coming in at 4,199. This would be classified now as a deviation, especially if we close the daily underneath over here. We now would have a deviation. Any pushback into that and a rejection would be extremely bearish. And now you need to be on higher low watch, hoping that this bounces off of this zone over here. If the S&P 500 can bounce off of this zone, it's coming in at about 3,900. Then possibly we have a chance of setting in yet another higher low in relation to these areas over here. So something like this, that would give the bulls a second chance to try and crack through the diagonal as well as the horizontal resistance, which we can see in this level over here. Now, looking at the NASDAQ, it's going to be somewhat similar. You can see the NASDAQ managed to push through its diagonal, and it didn't quite make it to the 200-day moving average, whereas the S&P 500 futures did, and it directly rejected off of that. This is something we've covered many times before, but I am expecting that the NASDAQ will probably break through this level over here. And the problem with that, right, is that when you consider things from a macroeconomist, and what's going on, I like to read this guy's journals over here, Mac 10. He's got brilliant takes over here, and essentially this is what he's saying. He has an additional supporting article from the Wall Street Journal. It says Wall Street bets that the Fed is bluffing in high stakes inflation game, and he goes on to explain in his blog post over here. So if you have a look over here, there's a whole bunch of things. I'm just going to summarize it for you for the sake of time. But Ferrari has reported record profits as supercar sales boom. So I mean, nobody's really feeling the pinch. The rich are not feeling the pinch. Pretty much it seems like everybody's still taking a completely risk-on approach. Powell will face a tough audience in Jackson Hole when he has to make his decision on the next rate hikes. Fed officials signal restrictive rates may be needed for some time. And then here's the important part, right? So risk markets are now overbought going into the riskiest period of this year and this cycle. The riskiest period being the Fed having to discuss if they're going to pivot or not, which everybody's calling their bluff and saying that, yes, they're going to be forced to pivot. But when you consider that September is usually a down month for the majority of the time, we have all the stock markets coming into major resistance, and crypto has not performed as well as the stocks have in terms of its relief rally. It's hardly pushed up. So to think that suddenly it's going to decouple, I think is wishful thinking. But he goes on to say, on the belief that bailout is imminent. So markets are overbought going into the riskiest period of the year of this cycle on the belief that the bailout is imminent, when nothing could be further from the truth. This week, the NASDAQ 100 reached the most overbought level in history based on its MACD. Tied with August 2020, another low volume levitation period. The MACD is a momentum indicator. Okay, we know what the MACD is. When the MACD is high, it means that the market is going parabolic and the short-term indicators moving quickly relative to the long-term. So then he goes on to say, in summary, soon all risk markets will be at new lows for the year, and the Fed will be doing nothing about it except waiting for bulls to finally capitulate, which is exactly what I'm saying as well. We need to see a capitulation event, and markets typically don't bottom until you see capitulation. And how can you measure capitulation? Well, essentially what you'll be looking for is extremely high volume, extremely high volatility as well. And at the end of a capitulation, you'll usually be left with a massive wick to the downside, followed by strong buying pressure. Candles usually still ends red, and then you can have an opportunity for some sort of a V-shaped recovery. So looking at the VIX over here, this is our volatility indicator for at least the S&P 500. And we do have our own ones for crypto. Now, if you look at the VIX over here, I have pointed this out before, but all the market bottoms, look, here's your March 2021. So, of course, this is going to be a bit of a black swan event, an outlier. I'm not necessarily saying we're going to have something spike that high, but at least to this zone over here, around the 48.50 level. We had the falling wedge pattern over here. Where the patterns work on the VIX, I'm not even sure, but at the moment, it looks like it is. Came to the bottom of the wedge, started to break out, and now we have massive volatility kicking into the market. Anytime that the VIX goes up, stock market goes down. Crypto is correlated, so you can expect crypto would probably suffer as well. Now, let's see what the Bitcoin dominance is doing. I haven't looked at this for quite some time. Quickly put on a high time frame. Okay, so Bitcoin dominance over here. This trend line failed. I'm going to delete that out. You broke below mid-range, seems to just be a small deviation, and it's recapturing at 47%. So it looks like Bitcoin dominance may start to gain strength as long as this area holds over here, which is coming in Bitcoin dominance at 44. Then this would be yet another higher low, and there's a possibility that it can push on higher. So just bear in mind, guys, for this Bitcoin dominance, this is BTC / and then in brackets, total minus USDT minus USDC, close your bracket. So that's the one that I'm running. It doesn't include stable coins because it seems to have an impact on what the true Bitcoin dominance is doing. So it's not the same as this one over here, for example. See, this one over here is showing that Bitcoin dominance is already near the range low. That's the one that's including the stable coins. Now, there's a couple of other important things as well to consider. Let me just grab this over here, and we'll move it up. So if you have a look at what Simon says over here, he says that the yield curve inversion does tend to precede major black swan events. And pretty much anytime the yield curve gets this low, this is on the 10-year yield, and you can see that massive wicks that's left behind, there is some sort of a news event that will follow. So it's what I said last week. all my tiles, although they sometimes may seem clickbait, there is an element of truth in those thumbnails on YouTube. I do try and forewarn you, and I said risk off, risk off, risk off. So it is mostly risk off. Yes, short-term traders, you can take longs, you can intraday is completely different, but I'm talking more for the investors. You really want to protect your capital, and that is how you survive a bear market, is by protecting your capital. Because what tends to happen is people keep trying to catch the bottom, and then by the end of the bear market, they pretty much already like 60, 70, 80% down. And you can ask yourself, how down are you currently in the market? I personally have not lost any money at all, zero. I sold all my coin at $47,000 for Bitcoin. And yes, I've taken short-term trades, but for the most part, you want to catch the main meat on the bone, as they say, in these moves. And in order to do that, you don't need to get the bottom. You just need to know that the market structure is changing and things are going back up. So having a look over here at that 10-year yield over there, you can see that, look, with the 10-year yield, we drew this in last week. We said anytime that the 10-year yield is also increasing, that is usually a bad sign for risk on assets and for the stock market. So you can see exactly that happening over here. You got that wick action over there, and I would expect continuation to the upside. And the main driver of this is, of course, the DXY, the dollar index. Look at that massively powerful weekly close on that candle over there. Same thing as what I said about Bitcoin or any other chart for that matter. Anytime you're coming into the new week and you want to make your decision about whether you're going to go long or short, and you're having a look at the week, you want to see how the weekly candle close. Now, a full body green candle close like this, guys, you need to consider this basically engulfed how many weeks? 1, 2, 3, 4, 5 weeks worth of downward action on the DXY was engulfed by one single candle, which would signify that there's most likely going to be continuation to the upside, and that's going to hurt your risk on assets. So dollar is definitely the bull run to be in at the moment, and there is always a bull run somewhere. So with that being said, okay, very quickly, I just wanted to touch on our Discord. For those of you that have been asking, because we've received a lot of messages over here, you can join the Discord. It's ready. Just click the link in the description below over there. And if you do want VIP access, that gives you access into anyone's VIP group, mine, Sheldon's. I don't know if Rand has a group there yet, where we drop alpha trades, our thoughts on a day-to-day basis on what's going on in the market. All you need to do is sign up using any one of the referral links. There's a whole bunch of referral links over here. Just use any one of the referral links, make a small deposit. I don't know what the minimum is, maybe $50 or something like that. And within 24 hours, you will gain access into the private group. The open chat is free for anybody. So if you do click on that link, you can go into the open chat for free. You don't need an affiliate link. Okay, moving on. Now, looking at the 3-day chart over here. So this is the one that I mentioned last week, said probably high probability we have continuation to the downside and most likely into this area over here. So if you have a look at this, this is kind of, you can elevate this slightly and say that, look, we hope that the bulls will manage to bounce it off of this zone and defend these lows, but that is really the last line in the sand. So when I elevated it now, I'm looking at anywhere between about 18.5 and 19.7, which once again ties in with those important weekly, monthly levels that we are looking at. If the bulls fail to bounce this level over here, that could very quickly lead into a capitulation event. I'm not sure how long it would take, maybe a couple of days, couple of weeks, but your next zone, and this is just pure TA, guys. I'm not being emotional about this or anything. You just really have to look at the levels of support. Consider this over here, and I have mentioned this before. Let's zoom in over here. So the previous all-time high of 2017, in order to form a strong level of support or resistance, you want a lot of time spent in that zone. You have to ask yourself, how much time did Bitcoin spend at this level over here? Well, this is a 3-day candle. I think we spent about a week's worth of price action in this level, and then pretty much price went straight down. Moving on over here, let's go sideways all the way back to where we are now. Then you have a couple of days of action over here, but it's not that much. So bulls really need to try and bounce it from this level. If they fail to do so, then can you see the free space in between over here? Just as quickly as price went up, and through this level over here, it can do it in the same fashion, if not quicker, to the downside. You've all heard the saying that you take the stairs up like that and then they take the elevator down, right? So this is essentially the situation. Once this zone gets lost over here and you start to close candles underneath, it will probably unfold very, very quickly. You'd be looking at something like this, maybe lose that level, try and recapture it, but it would happen very, very quickly. I'm still looking towards September if that is going to happen. There's no certainties in this game. We're just playing a game of probability. Trading is very similar to gambling, although you have more direction because we have indicators and price action, and psychology of humans tend to repeat itself. But if that level gets lost, my next zone comes in all the way down. Look, 16 has one little chance to bounce off. If 16 fails, which is also your mid-range over here, then you're going all the way down to around 10 to 13K. And the reason that area is something that I focus on is just because, again, history tends to repeat itself, right? It rhymes. It's not exact, but it tends to rhyme. And if you look at any of the bull runs that we've had, you always have between an 80 and an 85% correction or crash, whatever you want to call it. So from there to there, we're looking at about 70%. From there to low, we went 73, 74%. If you go all the way down to that next liquidity zone, it's exactly in line with history, which is 82% down, and it's a strong area of support. Look at the amount of support that you'll have in this area. This is a reasonable amount to assume that price can bounce from that level. You're contending with the Fed. Don't fight the Fed. Don't fight the Fed. That's the most important thing. If you can take one message today, it's don't fight the Fed. So I am expecting a bit more downside on Bitcoin. Dollar cost averaging over the next 3 to 6 months, probably a good idea. Probably a good idea if you don't want to try and pick the bottom and you want to get a gradual entry in. I made a fantastic dollar cost averaging video. If you just type that in on YouTube, I'm sure you'll find it. But that will kind of give you an entry, something like this, more gradual entry like that. Maybe your average price will be somewhere there at, let's say, about $15,000, $16,000, assuming we spike down. So keep that in mind. Now, looking at this chart over here, daily, I did mention to you the daily is one of the most important. Again, more confluence within the zone over here. I have 19,000 to 19,600 as pretty much, again, the last line in the sand for the bulls. Let's let that load up. So you have a tiny little bit of liquidity over there, and a little bit of liquidity over here. Maybe we're going to sweep down into this area, and there is a potential to bounce. But we'll have to take it each day as it comes. RSI worked out for us. It warned us of this move. I told you guys to watch out for this for a long time. We had ample time to get out of this. We spent 1-2 days out. That was more than enough confirmation. 2 days outside of the diagonal trend line, 2 days with the RSI breaking its trend line, and that was telling you that there was going to be a big move coming to the downside. Now, I still want to see the RSI trend a little bit lower. I want to see the yellow moving average start to flatten out and potentially regain its upward momentum, and then we can start to look for some longer term bids. But until then, that's not the case. Covered this chart before as well. Mentioned to you that you typically see the market contract, expand into red, contract into the gray over here, expand. We had another contraction, and now you can see the red is beginning. And I would think it's not going to be any different to these ones over here. Gray, red, expansion. Red becomes, these moving averages start to expand and stretch out. So distance between them over there, and then that's kind of where you start to find your bottoms. And from a timing wise, if you kind of have to just look, I don't want to try and time the market, but just assume it looks something like that, then pretty much look, it's October, September, somewhere around there is looking like where you would expect to find the bottom. And looking again at the markets, I have the magnet over here. That was just for the sake of one of the thumbnails that we had to use, but it comes into the liquidity zone, downside liquidity zone, 10 to 12K. So be careful with your longer term investments. Implement a dollar cost averaging plan. I really recommend that. I think now is kind of the time to do that. If you have a time horizon of maybe 6 months that you want to deploy over, that's probably not a bad idea. But it's not to say that things will definitely recover the way that we want with a V-shaped recovery. What you might see is expansion like that, and then you kind of just hang around within this area and you form some sort of a range between, maybe you form the range between 10 and 20K, and we stay there for a year or two. If that happens, as a trader, you can make a lot of money, because remember, the market does two things. It's either arranging or it's trending. So learn how to range trade, can make some good money in the ranges. Now, shorter time frame. Now, I'm talking to those of you that are maybe trading intraday or holding swing positions. This is essentially what I was looking at. I put this chart out on Twitter, I think on Thursday, Friday, or over the weekend or something. I'm kind of viewing this area as a potential area where price could bounce from. And what I was seeing is, look, possible sweep of the lows, which are coming in from the 26th of July, sweep of those lows, which is sitting in at 20,969. And why do I say sweep of the lows? The market likes to flow towards liquidity. They can see that the orders are set here, stop losses are set here. Remember, what people would have done, right, is it would have been very difficult to buy this bottom because price was almost capitulating over here. These were knife catches that caught this, send price back up. So now they start to look for a trend, right? So price comes down into this zone over here. Most people probably miss that as well. Now they take a trend line, they draw a line from there to there. They say to themselves, okay, let's see what happens over here. Boom, hits it again. Probably some people bought, put stop losses under there. Price went up, came down. Most people would have bought over here. Stop losses underneath. So what does that mean? There's a lot of liquidity here. This zone has liquidity. This zone has liquidity. Price got sent up again, came back down. And I don't know how many people would have bought over here because it didn't come all the way down to the trend line. Maybe they started to FOMO in over here. And now your stop losses are in this zone over here. So they're going to hunt those stop losses. Big players in the market. When I say they, I'm talking about, hedge funds and things like that, guys that are placing these mega orders and they need those orders to get fulfilled. They're going to be searching for the liquidity in this zone. And that's kind of the idea that I have over here, is a sweep of the lows. It also happens to come in line with the fib retracement level, which is the 0.618. Your golden ratio is at 20,500. So what I did is, as usual, I gave you an approximate level over here because sometimes you can't exactly pinpoint the precise level that it's going to wick down into, but this was the general idea. If you use this system over here from 20,500 and scattered your orders up to about $21,092, you probably would have been filled on about 55% of your orders going long. And if that is you now, you can pretty much raise your stop loss. That's what I would do. I got filled on one or two. I'd probably put my stop loss now. Let's zoom in over here. So if you are long, consider putting your stop loss underneath these lows over here, which is coming in at, let's just delete that to make it clear, 20,987. I would put my stop loss underneath there. You already had this wick that happened. You don't want to see it wick down again. I think I'm 10% entered. I was a little bit more greedy on my positions. I decided to set the majority in the bottom half, just because I believe this is a market that you should more be looking to short than you should be looking to long. It's a risky environment going for longs. It's just for the sake of this competition to try and gain a couple of percent anywhere that I can. I don't have too much time to trade, busy with a million other things, but catch a small short-term bounce. And then what next? Well, what next? I'll be looking anywhere around this 22,000 to about 20. It would be a push to go to 23. I would say about 22,300 to about 22,500. So I've given you a $200 range. Somewhere within that zone, I would expect shorts will start to enter rapidly. So I'm going to outline the zone for you. And then You can feel free to take a screenshot or whatever, but that is essentially the zone. Do you see the blue on the right-hand side? That should outline the zone. I have 22,300 to 22,700. I'm expecting price to possibly over, whether that happens today or over the next couple of days, I'm not so sure, but push up into that zone. Shorts get re-entered in this area and then target much lower. So guys, that is essentially what I'm looking at. I think we've covered most of everything. Oh, quick shout out to my sponsor, OKX. If you would like to join, then there is a link in the bio. So just click that link over there. And there is going to be a mystery box. I'm doing a big reveal. I don't know what's inside. It's completely arbitrary. So we'll find out on Wednesday. I'm going to open the mystery box. Apparently they give some sort of cool drop over there. I don't know if it's money or NFTs because they're involved with NFTs as well. For those of you that would like to join, the incentive is apparently better if you sign up using your mobile number. And the reason being is because then there's very limited chance that you are a bot. Anyone that has a verified phone number would not be a bot. So if you do want to sign up, consider using your phone number. You'll probably get a better gift in the mystery box. Okay. Last but not least, I just want to touch on Bitcoin on the 30-minute chart over here. So I've got two ranges, right? Just make that bigger, expand this. Okay, I'm going to make this, I'm going to put on a 1 hour or 2 hour chart over here just so that you can see properly. So remember, guys, this is a bear flag. The bear flag has started to break down. If you take a retest back towards the top of that bear flag, it comes in at about 21,900, which is similar to the levels that I just gave you now, where I would expect that people are going to start going short on the market. So there's a couple of different things that are going on here. And after a big move to the downside like that, you kind of need to see how the market reacts if it's forming a new range. Because usually, again, it's the same thing. Like I've just said, you have periods of where the market's trending or expanding to the up or the downside, and then it starts to range. So big expansive move, and then it starts to range. Now, the goal as a trader is you want to identify that range, and then essentially you're just playing the range. So short selling the top, buying the bottom, and bouncing in between that zone until the thing starts to break down again. So I'm still trying to identify exactly where this range will be. Last week I mentioned to you that, look, it may fall within this area over here, which is the blue box, but it's looking a little bit tighter to me at the moment. All you need to do, pretty much just take your trend line. It looks like short term, this is essentially your range. I'll make this nice and big for now. Intraday, this is your range. Let's make that big. There it is. Okay, I'm gonna make it, what color? Let's go orange so you can see it nicely. So this seems to be the primary range that we're going to be stuck in, at least over the course of maybe today and tomorrow. Anytime price gets to 21,776, I would most likely sell that. Anytime that it gets to about 20,783, so looks like you have about $1,000 range, then pretty much you can buy that, right? So you're looking to play the chop in between. So bottom of the range, buy it. The wick didn't quite make it there, so that's why I scatter my orders. As you can see, the wick came down to 20,900. Kind of scatter your orders, maybe place 5 or 6 orders there. Price gets sent up. Same thing at the top. Set or sell orders with 5 or 6 within a range over there. Get to the top, short sell back down. And so we just play the range until this breaks down. And I expect it's probably going to break to the downside. It could break up, but I think it will probably break to the downside. And guys, I think that is pretty much it. We've got it just about all covered. Please make sure that if you enjoy the short form content, that you give the video a like, hit the bell notification to receive a notification anytime that we go live. And if you aren't yet subscribed, we appreciate it if you do subscribe. Join the Discord group. Look, I'll be honest with you, I'm not as active in there yet as I want to be, but I will be over the next couple of days. I just need to kind of alleviate some of my schedule. It's a new thing that we have running, so it does take up a lot of the time, still doing the daily candle newsletter for you and all of that. But I'll always drop in the Kyle's thoughts section to give you my thoughts as price action unfolds during the day and what I see personally happening. So that is it from me. I appreciate each and every single one of you. Until next time, I'll see you guys all on tomorrow's video, and cheers for now.